Why it's hit crypto is because the entire asset management world's underweight tech. And so they're chasing into year end, and crypto being at the margin in liquidity gets whacked in the meantime. Everything Bitcoin and ETH, they've not gone to new highs this cycle yet. Feels like there's still a lot to go. All of the fast money guys, they will flip out for a 5% profit because it's like 60% return. They don't care. And then you've got to find all the buyers to actually replace it, the institutional capital, which we're just not seeing really yet, except in Bitcoin and ETH. The other feature that we've seen, and not surprisingly either, because we see it every cycle, is OG selling. We've seen a bunch of people, 44 billion I think was the number I saw. You know, prices went up a lot, interest rates haven't come down much yet, and until the government reopens or the Fed get forced to, well, they're going to end QT, but then they need to increase their balance sheet and all of that. The dichotomy is they're not throwing money into crypto because they don't have any.
Today we have Real Vision CEO Raoul Pal giving us his updated prediction for crypto, how the upcoming cycle will be different, and why the recent crash in crypto prices is a massive investment opportunity. With crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months, and why this year, more than ever, we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself as devalued fiat currencies push more adoption into the crypto market and bring in more capital than we've ever seen before. Drop your comments down below and subscribe if you enjoy the content we do here.
There's a bigger opportunity than people can see, because a lot of people have got their heads conflated with like it's the end of the cycle, it all failed, crypto's dead, and I'm like, no, I think the cycle's been extended for a bunch of reasons, and liquidity is this reason. And once you see it through a liquidity lens, it completely explains what we've been talking about, and then why there's all this discounted stuff. So therefore, once liquidity flows, you're going to see a re-rating of the space in a way that people don't even believe is possible again. And one of the things I've looked at is a lot of people complain that this year has not been like the classical fourth year. Yeah. Right? And we've seen it, we've had no alt season. If you look back at stuff like everything Bitcoin and ETH, they've not gone to new highs this cycle yet. It feels like there's still a lot to go. I did a lot of work on this and I found out that, a lot of this 4-year cycle is actually built on the debt cycle. And in 2021 and 22, when rates went to zero, they pushed out the maturity of debt by a year. So it's all to roll $10 trillion to roll this year in the next 12 months. So it feels like we had sort of an interim year. I still think we finish up strongly, and I think it goes a lot longer than people expect. And the other issue is who the pipe holders are in the beginning. It's just jump trading and Millennium and, all of the fast money guys, and they will flip out for a 5% profit because on an annualized return, it's like 60% return. They don't care. And then you've got to find all the buyers to actually replace it, the institutional capital, which we're just not seeing really yet, except in Bitcoin and ETH. So, I mean, if you are one of these people who bought Bitcoin at $10, right, you're just like, well, I'll take some off at 100 grand, at 100,000, because you're suddenly up 10 billion. It's like Novo did that unwind for a Galaxy. That was $9 billion. It also, MicroStrategy also tells you that liquidity is constrained, because for a while he was able to just keep issuing stuff. Now he can barely do anything. I just don't know how they've done it, but suddenly it's like la la land prices. I mean, they don't need Bitcoin to double again. If you're worth 10 billion bucks, I mean, is the extra 10 billion, if it doubles again, worth your while? No, so they just kind of use maximum liquidity to just try and ease out. The other feature of this market is, you alluded to earlier, we've had no real new liquidity in outside of the very top end. And that's a function of, this has all been generally driven by retail. And retail in most places don't have any money because, prices went up a lot. Interest rates haven't come down much yet. The economy still, the actual economy, look at the ISM survey, still below 50, so it's not even expanding. And then you're like, well, obviously they're not throwing money into crypto because they don't have any. The other feature of the market that has been really interesting is stablecoins. Obviously, after the Genius Act, that's been good. And the US has figured this out. I mean, like Scott Bessent's gone, oh, this is how we dollarize the world, and we can fund like $3 trillion of short-term notes via stablecoins. This is one of the foundational principles of crypto, and people forgot it for a while because the governments weren't involved and because big banks weren't involved. It was like, doesn't really matter. And now suddenly it's like, oh, okay, maybe it does. It's difficult in hedge fund land right now because there's a lot of value and not enough momentum. And we've gone through a horrific year of chop so far, really. Yeah, Bitcoin's managed to eke its way higher. ETH had its rally from its lows, and it's now kind of in line with where it should be. But it's tough, right? Because unless you're a trader, you can't make money. You can't sit on anything because there's not enough liquidity. So the alts market bleeds, even if it's cheap. But it's super attractive, some of this stuff. Yeah, and it's not like we haven't been here before. It's just been a very frustrating market, and we probably end up finishing much higher into year end. And you've waited all year, and all the returns come in 2 months. I mean, we're kind of used to this kind of ridiculousness of this market. So it's kind of, we had this in like 2018, 2019 before. And why it's hit crypto is because the entire asset management world's underweight tech. And so they're chasing into year end because I saw the stat yesterday, 80% of all funds have underperformed the market this year. So they're all chasing that, and crypto being at the margin in liquidity gets whacked in the meantime. In the end, the network is a utility. Although because of token economics, you capture some of that. So yes, the network value still goes up because you're building on a network and you create Metcalfe's law value, but the applications layer is the thing that drives it. It feels that stablecoins is going to bring the new people on for DeFi in a scale that we're not really prepared for. Because, if you have a stablecoin app that works really well, that can be built on like a network and it can go to the end user in Thailand, and you build borrowing and lending on it, okay, we're now bringing in net new people doing net new things on chain, and it's not us lot shuffling money around to try something out and make a few bucks, right?
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
The other thing that's interesting to me was the Circle IPO, right? It traded at a massive premium to revenues. And I've seen this before. It's either like a full-on retail frenzy speculation, which it wasn't, or the price is telling you something that is not priced off discounted cash flows, that they're pricing on Metcalfe's law, that it's a network. And then you saw the announcement, I think it's called ARC, that they did. It's like this huge labyrinth of people involved. And they're like, there you go. They're actually building a money network from scratch with, instant velocity. And the market is going to price this very valuably. That's also directly investable. So AI is growing faster. What can you do? You buy Nvidia. If not, it's part of Google's balance sheet and part of Microsoft and part of Meta. You can't get pure exposure very easily. And what about the private stablecoins that have been launched? That was like, really, are we doing this all over again? This is like the 2017 thing where we're going to have these private networks, but seems to what's happening. They're building their own layer ones, not even layer twos. The other one that's been a really interesting rise is prediction markets. And it just shows you how you can abstract away options, because a lot of these are option markets. You can bet on where Bitcoin's going to be at the end of the year. Like, will Bitcoin break 150,000 by the end of the year? It's like a 13% chance, which is low. But that abstracts away an option down to the probabilities and make it ultra easy for people to just point, click, shoot, done. No onboarding with Robinhood and Coinbase or the interactive brokers, none of it. In seconds. I'm fixated on as well is asset management. We can see the Apollos and Blackstones and everybody, they want to tokenize their funds to try and sell them to investors, which these are illiquid assets with tokens. Retail don't want that rate of return. But what I see on the other side is the rise of these vaults where You can create baskets, you can do stuff instantaneously, and it becomes a much more efficient for individuals to create asset management firms. Think of how difficult it is to start a hedge fund, right? The amount of paperwork and cost to do it, when basically you can do it on chain for zero cost in seconds. And people that's just early, but it's coming.
Yeah, I mean, we've seen this bizarre reversal where crypto is kind of, broadly seen as the kind of hype sector, right? Whereas I'd argue it's the reality sector now in terms of profitability and growth. And we're probably seeing the reverse of what's kind of historically been the case of kind of overhyped, under-delivered, where we're actually seeing most things that, have built utility over the last 5 years over-delivering and getting not rewarded at all. I think the cycle's, a difficult one to sort of get your head around because the construct of the market's changed so much, right? So to me, a cycle is more robust if it's the same group of people trading the same kind of assets over the same kind of timeframes. But the makeup of ownership of crypto has dramatically changed over, even the last 2 years, right? We've seen the influx or the liquidity sink of all the Bitcoin and Ethereum, and now Solana starting to go into ETFs. So I think we have seen a transition of ownership of people that will look at the market in a different way. So personally, I would expect the cycle to break down and lose, I guess, what we've seen traditionally, where you've had pretty similar group of people trading pretty similar assets with a pretty similar mindset. Market's probably telling us a different story though. So, whether we're right or wrong, let's see in 6 months. What I'd say is very undervalued, triple digit tech growth space that's about to get regulatory clarity and all the sort of nice things that traditional money would like to see. But the flows have been terrible, right? You've had great flows at the top end of the town, Bitcoin, and to a lesser extent Ethereum, and it's kind of been a wasteland outside of that. Markets are pretty good at sniffing out kind of opportunities and marrying that up with liquidity. So wasn't super surprised that the DATs sort of came along and married up what you could argue would be excess liquidity in pretty expensive equity markets with a dearth of liquidity in crypto markets, and we saw that sort of initial surge come around. I think there was always going to be some indigestion come out of that, and equity markets are good at finding opportunities, and when they find them, they're extremely good at pressing the advantage and pumping as much liquidity into them as quickly as they can, and DATs are a good example of that. I think as we look forward, where do we see the DAT market? We don't think it makes a bunch of sense to have 50 DATs owning the same asset. So we think there's going to be clear winners. And if you look at the Ethereum sort of stable of DATs, you can see BitMine is just pulling away from the rest now, right? With huge growth while the others kind of stagnate.
Pal stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.